India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. Welcome to Bazaar Morning Call from the CNBC TV 18 and the Motilal Oswal studio. First up from me and my co-anchor Rima and the entire team at CNBC TV 18, both people on the camera and the many more useful people behind the camera. Here's wishing all of you a very happy 2025. May you be healthier, happier and have a fun-filled year. Happy New Year to you too.
Happy New Year, Lata. And it's good to be working on 1st of January because it's sort of like a harbinger of, things to come. So I'm excited to be here, We've been complaining that,
I'll reserve my views on that. I genuinely believe we are following the Gregorian calendar for everything. February 1st is, budget day. Or, whatever. We follow the fiscal year is April 1st.
If the markets are open, I'm happy to be here.
If they're open, I'm happy to, but I don't think we should be open at a time when nobody else is working and the queues are going to be practically non-existent and people have a right to enjoy. For better or for worse, I would feel very bad that young people are being dragged into the office. Maybe you're not one of them who lets your hair down, but I know a lot of people who do. And I would think that the government of India must seriously give this a rethink. I mean, I'm ready to go all the way to Delhi and make my case and say that this is not the way to insist that people have less fun. I'm not convinced at all of that argument. But anyway,
just wishing all our viewers a very happy new year. Wishing you a lot of peace, love, good health and happiness in the coming year. But let's get to the markets.
Oh, yes. Actually, unfortunately, I'm happy that I have something to say positive in terms of wishing people because the cues continue to be negative for both India and for all emerging markets. It's not just that the US markets closed with red ticks. The Dow was not, it was almost flat. But the Nasdaq has closed with almost 1% down tick. And the other, the currency yields, all of them are not very clement. In fact, the dollar index went all the way to 108.5. So it was a very strong finish for the dollar. Of course, it's a big finish, 8% higher even for the year. But the point is overnight as well, we have to come to terms with a much stronger dollar. As well, the US bond yields went up by about 5 basis points, 4.5758. We have seen 4.6 just a couple of days back, but still this is higher than yesterday. So all that does come into algo trading. When you see the dollar strong and yield strong, then money tends to migrate to those kinds of instruments. And that will explain why you saw the FPI number as well. We all thought thin trading last day of the year, but look at the huge FPI selling. Yes, it's matched by DII, measure for measure, rupee for rupee. But even then, the point is we are not getting the prop or the attraction from global markets. I want to just dwell a little bit on the macro data that we got yesterday. We get a bunch of data almost always on the last day of the month. And this time we had the core sector data coming in November. It is a modest 4.3%. The only thing positive to say for it is better than the October number, which was 3.1%. But otherwise, I think the bright spark over there was cement. Cement's done very well. And coal was next in line at 7.5%. Steel at 4.8 is not exactly spectacular. But still, let us call it close to 5%. The others are all very poor. Refinery products, crude, fertilizer, even electricity, all of them in very low single digits or even negative. In fiscal data that we got, November tax data, over there, the positive would be that tax growth, income tax growth is very high. Importantly, capex was fairly good for the month of November. I mean, it was about 20% higher than a month ago. But we have still not bridged the April-November capex. If you look at April-November capex, it is still 13% lower than April-November of 2023. So it looks like the government will not be able to reach its overall capex target. In terms of tax revenue, overall not very good, 0.5% higher. Corporate tax revenue is actually lower if you look April, November. But income tax has done very well. And that becomes important because that spurs consumption, hopefully. And GST number, I'm only taking CGST, that's not very relevant. We need the overall GST numbers. One hopes that is higher, but we have to wait for a few days to get that number. So growth signs look modest. You can't call them robust. And of course, auto sales due today, tomorrow will perhaps be the best lead indicator. What do you have for us?
Okay, let's just quickly recap once again the US markets, because Wall Street ended lower for the fourth consecutive session, but it was a languid low volume trade. S&P 500 down close to about 0.4%, the Nasdaq slipping nearly 1%, but it was a remarkable year for US equities and US exceptionalism shown. For the year, S&P 500 is up 23.3%. Sorry, and 23 and 24 combined gives S&P 500 a 53% kind of a return. And this is the best two-year gain since the 66% rally that we had in 1997 and 1998. The Nasdaq, the AI-powered boom pushed up the Nasdaq index to close to about a 30% gain, though the Magnificent Seven accounted for more than half of S&P 500's 2024 return. And look at the way NVIDIA boomed. NVIDIA stock price was up 170% in 2024. For the Indian market, yesterday was a flat finish despite the intraday recovery. The Nifty closed at 23,644, so still below our 200-day moving average. So resistance for our markets will be closer to 23,870, which is the 200-day moving average, going up to 24,000. On the way down, yesterday's intraday low of 23,460. So 23,460 to 500 should be the support or the markers you should have in terms of a trade. Flows, the DII's net bought 4,546 crore. The FI's net sold 4,645 crores. So pretty much evenly matched. But the FI selling in the month of December is nearly 17,000 crore rupees. And the total FI selling since the market made its peak towards the end of September stands at 1.85 lakh crore. Now, typically, January has not been such a kind month for the Indian market. So there is a seasonality associated with, January. And at least in the last 6 years, the Nifty has given negative returns in the month of January, ranging between minus 0.3 going up to 2.5%. And brace yourself for a roller coaster ride, at least in the first half, because lots of cues, auto sales, PMI numbers, quarterly business updates come through from banks, from real estate. So that should start trickling in this, starting this week. Corporate earnings, of course, the big one will be 9th of January, TCS, Trump swearing in, the Fed meet towards the end of the year, and first, union budget. So we're giving you cues till the 1st of February, but, it's going to be a very news-heavy, headline-heavy roller coaster ride for our market.
Oh, absolutely. I mean, it's extremely well put. Thanks for a nice wrap, Rima, of the things that are going to move January. January tends to be weak also because there are conflicting views about what will come in the February budget. So that has been historically one of the negative points. But I know some Januaries which were outstanding. And I think that was one of my first budget years, perhaps 1997, Vajpayee's year. It was a dismal finish, the 97 December, 98 in just about 13 trading days, we rose 25%.
Wow.
25%. Those days we tracked the Sensex.
This is why I love anchoring with you, because Lata, you give us perspective and history, which we've never seen.
Okay.
So it's,
some advantages of experience. Okay. But it's important that, January tends to be difficult only because people discount the bad news. And usually we have very good Februaries, the post-budget rallies. Remember, so many of them. But anyway, one day at a time. Let's look at some very important advice and comments that are coming ahead of the new year. Sanjeev Prasad of Kotak Institutional Equities gives us the equity call of the day. He says 2024 was a year of two halves with solid returns in H1 and no returns at all in H2 for the market. He says 2024 returns varied from moderate large cap index to solid small and mid cap indices, while 2025 will likely start soft. Given expense of valuations, continued consumption weakness, a wide range of possible US domestic and global policies and outcomes, and an unsettled global situation.
Sanjeev has also announced some model portfolio changes. He says they reduce the weight by 90 basis points on ICICI Bank, allocate some to IndusInd Bank. They removed Britannia and reduced the weight by 150 basis points on United Spirits and allocate 30 basis points each to Dabur and GCPL. They also remove SBI Life from the portfolio and allocate the same to HDFC Life and ICICI Pru. Sanjeev says they increased the weight in Adani Ports and Cipla by 50 basis points.
Okay, that's useful advice to start the day and the year. But